What is up, y'all? I am exhausted, but I've been trying to record this for a couple of weeks. So just work with me and I'm going to give you everything I got. All right. Let's talk about international banking, becoming internationally bankable. Okay. So I want to talk about this because it's really important for us to be thinking about where our money actually lives. And so this is not really about how much you make or what your credit score is or your investment portfolio. I mean, what country is your money sitting in? What currency is it tied to, and what systems control your access to it? Now, if you're paying attention to the global tensions like the rising conflicts, sanctions, tariffs, the possibility, the extreme possibility of economic downturn, then you should also be paying attention to banking concentration and the risk of having 100% of your liquid money in one country's system. So, today, I'm going to break down why diversifying where your money is held matters. We're going to talk just a tad bit about why digital finance literacy is becoming a non negotiable. And then stay till the end. I'm going to share 5 banking options that allow non residents to open personal accounts. Okay. And then I also have 2 tools that support global money movement. So, a lot of information. Take some notes. Welcome to my channel. If you are new here, I'm Jice Johnson. I'm a business strategist and an economic developer, and this is where we discuss business, leadership, and global politics. So be sure to like, subscribe, and share if this is your type of conversation. So, I want to just start the conversation today by saying that this is not about hiding money. Okay. So, these institutions are compliant, they report back to the US. This is really about diversification. So this is like where your money lives, that matters, right? So when we talk about diversification, I think most people understand it when it comes to investing, but almost nobody talks about like diversifying their banking. And I get that. It's not necessarily something that you would think about. But I do think that that's a problem because your bank account is not just like a place to store money. It's your liquidity. It's your ability to transact. It's your ability to move quickly. And it's your ability to respond in a crisis. And so when the world gets unstable, right, those risks are no longer hypothetical. And in economies like we see today, governments and institutions can change the rules on transferring your money. They can increase compliance requirements. They can freeze your account. We see this often with investigations, but if they change your compliance, they can change the requirements around freezing your account. They can restrict movements of funds in certain situations, or like in the worst case of scenarios, for example, that they can just like face bank failure. And we've seen this right in the US. So if all of your liquidity is trapped inside of one system, then you're exposed to policy risk. So we just talked about that. Rules can change, right? You're also exposed to institutional risk. So if the bank fails, you're also exposed to currency risk, right? So this is if the currency loses value, much like the dollar is currently losing value. And then you can also be exposed to geopolitical risk. So geopolitical risk is important because that's, when things are happening globally, right, then tensions can really drive restrictions. So these are things that we should just be aware of, right? So I want to be clear. This is not like a sky is falling type of conversation. What I'm really talking about is risk management. And I believe that that's a form of financial maturity. And I think it's important for us to be thinking about that because we're also in, I wouldn't even say an increasingly global society, like we're in a global society now. So we need to be thinking about our money from a different perspective. So, think about it like having an emergency exit in a building, right? Like you want to have a way out, not because you're expecting that there will be a fire, but just because fires can happen. So that's really what we're here talking about. All right. And so I want you to think about currency as not being static. And you might have to stretch this a little bit because if you're someone like me in my lifetime, right, like currency has always been in the form of like dollar bills. And I think we get gold, silver, things like that, but we don't use that as mediums of exchange because the bills, at least in times past, have represented that gold, right? And then now we are on a fiat system But either way, when we're thinking about currency, we're typically thinking about dollars. But currency is not static, and it never has been. Currencies have risen, currencies fall, they lose purchasing power, they get restructured, they get replaced. So, right now, we are watching the next evolution happen in real time. This is the global financial system, and it is moving towards digitized money rails. It is moving towards tokenized assets, which is important for things like faster settlement. Um, but it's also looking at like new forms of value exchange that don't look like the traditional banking that we are accustomed to. And so from the digital perspective, if you're concerned about surveillance, I think you should be. But that's not the scope of today's conversation. So we're going to put a pin in that and talk about it at another time. But we should understand that digital finance, especially like tokenization, for example, this is not a future idea. This is not something that they're talking about. This is something that they're implementing. This is the next wave of currency. It's the next wave of currency infrastructure, and it is here. It's already here. It's just not dominant yet. And one thing that I'm always concerned about for our community is that we are constantly behind the trend, and we cannot afford to be behind the curve on this. So it's really important that we start to understand like the world of digital, finance, right? And like, don't get me wrong, we're already there. Like we are already operating in the world of digital finance, but again, the modalities of money are changing and we need to be aware of that. So, um, like I said, I'm not covering digital finance or tokenization in depth in this video. It is a conversation on its own. We will get there. But the reason why I wanted to make that connection is because I do believe that people really need to understand, right? Like the moment that you expand access to your money across borders and across currencies and across systems, you're inevitably going to collide with the modern world of digital finance, right? Because international banking requires that. It requires digital rails, currency conversion happens digitally, cross border settlements happen digitally. And your liquidity movement is being tracked digitally. So even if you think that you're just, you think we're just talking about opening a foreign bank account, what you're really doing is you're stepping into the modern global money system. And that is going to stretch what you think you know about money, how you already use some of these systems. And so, yeah. So, anyway, so the leap is not that far, but so let's get into it. I think one more thing that I want to make sure that I address before diving in, right, is like, if you are a US citizen and you are opening up a foreign account, you're opening up an account outside the United States, and in particular in a country of which you are not a resident or a citizen of, right? This is not equivalent to hiding your money. So there's no, we're not hiding or evading anything. Um, Every legitimate international bank that accepts US clients is what they call FACTA compliant. Okay, that's the Foreign Account Tax Compliance Act. It is a US law that was passed in 2010 that requires foreign financial institutions to report information about financial accounts held by US citizens. Or maybe I should say like US persons, like US citizens, green card holders, residents, right? Certain residents to the IRS. So this means that they are going to collect your US tax information when you open the account. They're going to report back the details to the US authorities, and you should disclose the fact that you have a foreign account to your tax preparer so that they can have the proper filings taken care of. Okay. So this is not secrecy, it's not evasion. This is diversification and this is access. And I just want to make sure that we're not conflating those two, right? Now, this also doesn't mean that the US is like controlling the money, right? This means it's getting reported on because it's getting reported on because the US wants to tax everything that we do. So the US doesn't want you making foreign income, making money in another country and then hiding it in a foreign bank account because the US actually taxes foreign incomes. So if you are a US citizen and you go to another country and you get a job there and you're earning income in another country, the US taxes that income. So this is why these countries are compliant and they're going to report back on you. Okay. So it's not control, it's reporting. So there's that. All right. So one more thing. I also want to make sure that we know we're talking about um, retail banking. So this is not for business banking. So if you're looking at opening a business in another country or, doing cross-border business, that's not what we're talking about here. This is for personal um, retail banking. Okay. So business banking has different regulations, different tax implications, different legal structures. So much like I would very much encourage if you have a business not to be commingling your personal finances and your business finances, I'm also going to say the same thing if you try to go on the foreign side. So your foreign business banking is going to look different than your foreign personal banking. And we should be clear about that. All right. So, what I'm sharing today is for individuals who want to diversify where their personal money is held and hedge against currency exposure. So, all right. Now, I'm about to share with you 5 banking options, right? These banking options are the banking options that I have found that do not require for you to be a resident of that country, which is what most banks do. So, most banks require for you to be a resident of that place in order to open up an account. Here are 5 banking options that do not. Now, if you are finding this helpful, make sure to like, subscribe, and hit the notification bell because there are lots of other topics that I think we should be getting into. And we're going to keep talking about it. All right. So hit that like, hit that subscribe, and of course, hit the notification bell. So let's talk about what it takes to open up these accounts. Every bank, all 5 banks that I'm going to talk about require passport, proof of address, proof of funds or income. So they want to know where this money is coming from, right? That could be income. That's the easy part, right? So if you have dividend income, retirement income, I am a veteran, I have VA income, wherever you're getting, if you have a job, all of those things are fine, but proof of income. But also proof of funds could be if you have an inheritance or if you have substantial savings, a 401k, things like that. So they want to know where the money is coming from. And then you're also going to be required to complete that FACTA compliance, right? That paperwork as well. So all 5 banks require those things, okay? Passport, proof of address, proof of funds or income, and your compliance paperwork. So the first bank, and we're going to go from like easiest entry to the more advanced levels. All right. So the first one is Standard Bank International. Now, this is part of the South African Standard Bank Group. So the parent company is South African. But when people are opening up like a Standard Bank International account, they are typically opening up that account with Standard Bank Isle of Man Limited or Standard Bank Jersey Limited. Okay. So that's really, well, the reason why you want to know that is around the jurisdiction of the bank, right? So this is a South African group. They're international. These 2 banks that open up accounts, if you are not a resident, they are of the British Crown. They're British Crown dependencies. So that's just so you'll kind of again know like who's controlling this. So Standard Bank Isle of Man and Standard Bank Jersey Limited. All right. This is where I'm opening my account. And once I complete that, I will get back to you with an update on what that looked like in terms of like my personal experience there. But this is where I'm opening an account. Now, this is one of the most accessible international banks for non-residents. The minimum opening balance is going to be around 7 to 10,000 USD or some equivalent. What this really tells you about the bank is that they're not looking for wealth, they're looking for legitimacy and they're looking for stability, right? So, this is why it's an ideal opportunity for first time international bankers or banking, I should say, and personal like savings diversification, things like that, right? So, people who want multi currency access without high barriers, this is a great entry point. Okay. But you do have to have that minimum balance in order to open that up. So think 7 to 10 US dollars. This might be looking like moving some savings over there, or you might have it like that and you can, go ahead and move some of your retail or everyday spending there. The second bank is Lloyd's Bank International. Now, Lloyd's is a long established UK bank with international divisions that operate outside of the UK mainland. So, Lloyd's minimum balances fall between around £5,000 to around £25,000. So, think around 7,500 US dollars to around maybe 30,000, 30-ish thousand US dollars. And that depends on the account type. Okay. And I'm giving you estimates because I'm not looking up a currency converter. I maybe should have done that and prepped it in my notes, but I did not. So £5,000 to £25,000, think 7,500 to like 30K USD. Some accounts do carry monthly fees unless the minimums are maintained. So, very similar to US banking, right? We know what that looks like. With Lloyd's, you're dealing with more of a conservative or traditional bank, and so they value predictable clients. They're really suited kind of similarly to standards, but of course, they have higher minimums. Um, so this may appeal more to like individuals that are stepping beyond that entry level international banking space, right? So it just kind of depends on what you got or what you're striving for. Now, bank number three, NatWest International. NatWest International. That bank is a step up from the entry level options. Okay. NatWest minimum balance is around £25,000. So again, think 30-ish thousand USD or more. And they will likely want a letter of reference from your current bank. So this might be an option if you're preparing for like higher tier global banking, and it's often like a bridge from, or it could be a bridge from retail banking into private banking. Okay. So if you're in that arena and you're thinking about making this move, this might be a good option for you. And, I try not to segue too far off my notes, but I do think that it's important for, some of us everyday folks to really be thinking about how some of the wealthy make their money moves. And I can assure you that wealthy people have their currencies, their dollars split into or diversified across banks and currencies. Okay. So that's how they hedge things. We need to be thinking about that. And so, what I also know because I study Black economics is that as I'm mentioning some of these numbers, like, hey, you need 7K or 10K or 30K to open up some of these things, you're like, oh, this ain't for me, right? And I want to encourage you not to think that way because we've got to be able to understand some of the requirements and then work towards getting those requirements. I'm talking on my social media, I spend a lot of time talking about the fact that the US is in a very precarious state. Again, I study economic development. I study economics. I study business, right? So these are the things that I'm saying, not from like a fear mongering perspective. This is studying the data and understanding some of these cycles and like what this looks like. And you can go down the route of like New World Order. You can go down the route of what all the predictions are. I'm not saying that we can predict this. What I'm saying is that the US debt is unsustainable. I'm saying that the dollar is losing its value. I'm saying that there are long-standing alliances that are being broken and new alliances are forming. And quite frankly, people are tired of the US's bullshit and strong arming and and meddling inside of their countries, never allowing for stabilization. So those are the spaces that I'm coming from. This is not a left versus right or Republican versus Democrat. I'm not any of those. I'm not a liberal, right? So I'm a person who's looking at the data and working to make informed decisions, and then working to inform us as a community what we could or should be thinking about with that information. So I'm saying that to say, right, because as I get into like bank number 4 and bank number 5, as I said, I was starting at the lowest tier and getting to the higher tier. So just know that these numbers are increasing, and I want you to still be thinking about what you need to do to position yourself and not just feel like all of these things are out of reach, right? So you can make a plan and you can get there. Um, but these are things that you need to know. And then the other side of that is that there are going to be those of us who can make these moves now. And you might not have been thinking about that along the way. You may have been thinking about diversification of your money. So you might be thinking real estate or stocks and bonds and, investments and whatever. You might be thinking about diversification, and now you're thinking how you can diversify across borders and across currencies and across jurisdictions, which is also why I'm telling you like where these banks are from, right? So you can be thinking about some of those things. But if this feels daunting, right, the first thing is you have to empower yourself with the knowledge to know what it takes. And then you can begin crafting a plan in order to start hedging and protecting yourself. So that was my little segue, and I'm going to come back to my notes and keep going. All right. So, bank number 4, that's where we are. Bank number 4, HSBC expat. Now, HSBC expat is where many people are going when they are really working to build a higher level of international exposure. HSBC is a British bank. It has strong ties with Asia. Now, with HSBC, also you'll start to see like these additional requirements. So one of them is maintaining around 75,000 pounds. So that's about roughly about uh, 90,000 US, roughly. Okay. Um, I'm quick with these conversions. I'm just playing. Around 90,000 USD is around 75,000 British pound. That can be in assets, or you can be earning approximately 120,000 pounds, which is about 100 and think about 100 and like 40, 45-ish thousand USD annually, okay, with regular deposits. And or you could already hold an HSBC premier status elsewhere. So getting to their premier status has some requirements as well, right? But just for an example, there are HSBC banks that are already in the US. So you may have begun your like banking relationship with them domestically. And then as you're thinking about, maybe opening up an HSBC expat account, right? These are going to be some of those requirements that might be waived if you already have a premier account with them. So HSBC expat is not just about access. They really prioritize relationship depth. Like they want to build strong relationships with their clients. HSBC is going to be targeting higher income earners and those preparing for investment and wealth services. So, unless you already got it like that, this is more like a destination, something to aspire to, and for sure not the starting point. So, yeah, not the starting point. All right. So, the fifth one, the last one, is Mauritius International Banks. So, well, really, I should say Mauritius based international banks, not just like one. And that's because Mauritius is actually a recognized international financial center, okay, especially for the Africa, Asia, Europe region and flows over there. Now, I hope you know where Mauritius is, but if you don't, no judgment. Mauritius is an African island off the coast of East Africa. So that's why it's not like one bank. It's really like the island is a recognized international financial center for that region. So they don't list their minimum amount to open up the account, but kind of based off my research, I believe that it's around 100K US, right? So they're kind of looking for some sort of substantial deposit. So it's definitely a higher tier of banking. Now, also for Mauritius, um, it's most likely that you'll have to open it up in person. So, or expect some sort of like additional or enhanced due diligence, right? So, you do not need to be a resident of Mauritius, again, but you will most likely have to open up the account in person. So take a vacation because the island is gorgeous. Now, Mauritius banks are focused on cross-border legitimacy and regional access. So this is, they're not really focused on like casual banking, still retail banking. It doesn't have to be business banking. But it's really starting to heavily it leans towards the private banking side, and they prioritize people that are seeking geographic diversifications, right? So that's what this is really that's what their prioritization is for their non-resident account abilities. All right. So none of these banks are loopholes. I don't want to beat a dead horse, but they are regulated institutions. They are operating under international banking laws. They do verify your identity. They do confirm your income. They do require tax disclosure. They do report that appropriately. And this is compliance based diversification. All right. So when we're thinking about international banking, I want us to be thinking about, it's not just about how much money you have, it's about how prepared you are to operate in a global financial system. So, before I close this out, I want to talk about two tools that are useful and can be used now if you want to increase your access, and you might not meet the minimum, income or not income, minimum balance requirements of the banks that I just mentioned. Okay, so I want to talk about Wise and I want to talk about Remitly, and just to be really clear, Wise and Remitly are not banks. They are financial infrastructure. They are rails that move money between countries and currencies and banking systems. So let's start with Wise. Wise is a very common app abroad. Um, what Wise does is it really holds multiple currencies in one place. It converts currencies at close to market rates, and it moves money internationally with a good amount of transparency and speed. Okay. um, Wise does not replace a bank, but instead it connects banks. So it really will sit between like your US bank, your international bank, uh, different currencies and different payment systems. So if Wise were a US only product, the closest comparison would be something like a mix of Zelle and PayPal. But like built for multiple currencies and countries. So, like Zelle, because it's going to move money directly between bank accounts and it's going to prioritize like speed and low cost, but also like PayPal because it acts as an intermediary layer. So it lets you hold a balance, right? So you know how you can, like, someone can send you money in PayPal and you can just hold that money in PayPal and you don't have to move it out immediately. So, what PayPal did was then they started issuing you a debit card. So they started to become bank-ish, right? Whereas like prior to them issuing those debit cards, you could hold the money there, but you couldn't use it again until you moved it out, right? So in Wise, you can do something similar like Zelle from person to person. So similar to that, just that exchange. Or you can upload money or put money or have money transferred to you and hold it. And then when you get ready, you can transfer it to the next destination. Okay. So like Zelle, like PayPal. Um, yeah, the key difference is that Wise does this across borders and across currencies, right? So those are not options that are offered in Zelle or PayPal, which are basically US operating. I know PayPal can be international, but Zelle is domestic, right? So, all right. So then the next one is understanding Remitly. Before explaining Remitly, I want to actually just do a brief explanation on remittances. A remittance is simply moving money sent by an individual in one country to a person in another country. So that's it. Super simple. This is not like payment for businesses. There's no corporations, there's no investments, just people sending money to each other across borders. So historically, like this has looked something like immigrants sending money home to family, right? Think about that, or like think about diaspora communities moving funds um, between countries. Okay, so now Remitly. Remitly is a platform that is built specifically to move money through remittance corridors, which is basically the common routes that money travels between countries. So, because we're not talking digital finance, I also want to make sure that I'm not like using words that make some of you zone out because you don't know what they are. When you're thinking about corridors in terms of finance, think about it like flight paths, right? Some are direct. You can go from point A to point B that one way, no stops. And then sometimes when you're flying, you may have experienced something like this, right? Like you can't quite understand why you've been routed through like Boston when you're flying from Atlanta to Houston, right? Like on the map, it doesn't make sense. But in the finance world, that holds true as well. So there are some faster direct corridors, and then there are some corridors that take you all over the place in order to get you from point A to point B. Like you went from point A to all these places before they route you where you really need to go. So instead of relying on slow and expensive like traditional bank wires, Remitly is an app that uses these corridors. It leverages local banking and the payout systems, and it moves money faster and often at a lower cost. So this matters because much like what I'm saying with flights, right? All money just doesn't move the same way. Some corridors are faster, they're efficient. So think that direct flight, right? They're well integrated with digital systems, right? And then others are simply slower, more expensive, more heavily reviewed, less supported by traditional banks. So think crazy layover. Okay. So the remittance platforms are really specialized in like navigating those realities with some level of efficiency. So if you're in the US, I think the closest comparison would be something like a Western Union, but just more modern. And that's what Remitly is like, right? So it's focused on sending money to people, routing it to people, not to businesses. But it does have a simple user experience, right? And it's mobile. I'm saying that because when I thought about Western Union as the example for like what this looks like, I remember having to fill out all that complicated paperwork to send money to someone. So like this is what made Cash App so amazing, right? Cash App came in and you could just pop off that money directly to who you wanted it to go to without all the craziness that you had to do with the Western Union. So kind of think about it like that, right? It's a simple user experience. It's mobile first. It offers fast delivery from person to person. Okay. I told y'all I was tired. I was coming here to give y'all everything I got. So, how do we feel? Is this helpful? Um, Tell me what you're thinking, right? Wise and Remitly, you can download now. I wanted to make sure I talked about that. Wise and Remitly, you can download that now. You can start working with them, right? Especially if you're planning to travel. Or you might be paying folks. Like for me, the first time that I used Wise was in Mexico. I was paying for a local photographer and an MUA, right? So it made my payment with them easy. But anyway, y'all. So in closing, here's a reality for us Americans. We already use some of these digital finance tools, Wise and Remitly. They take on, some of the same concepts that we are familiar with and apply them globally. We're already familiar with some of the ways that we just talked about with the banking, right? What are the minimum balances to open? Not going through like all the different fees and things like that, but knowing that some of them have fees, understanding how to think about or pick the bank, who is this bank prioritizing? Am I the right type of customer for this bank, right? So, we're familiar with some of these concepts already, right? Which means that the learning curve, as I mentioned before, it just isn't as steep as you think. And oftentimes, if we're fearful about something, it's really because it's just unfamiliar. But ultimately, global money movement is just an extension of the systems that we're already using. And the banks and the tools that I talked about here, these are not, new or speculative. These are proven and trustworthy banks and apps. So, as I close this out, I just want to remind you that we are really living in a moment where these global tensions are rising and the infrastructure behind money is changing faster than I really do think most people realize. And so, if all of your liquidity is living in one country, one currency, and one system, then you are exposed whether you acknowledge that or not. And so what I'm encouraging is intentional access, right? I'm encouraging you to be intentional about your access to multiple currencies, access to multiple jurisdictions, um, access to multiple rails for moving your money, while staying compliant, transparent, and informed. So, and I'll say this in my, Baptist closing. I think once you start expanding access to your money, there is something else that happens, right? You're forced to expand your understanding of money itself. You start paying attention to like how your money is moving, how long it takes to settle, what cost, what is the cost to convert, who's actually controlling the rails, right? And so, this really increases your financial literacy overall. So, if this expanded how you think, you can show your appreciation by liking, sharing, drop questions in the comments or drop your thoughts in the comments, right? If you like any of these banks, if you're thinking about them, excuse me, I mentioned my bank to you. I'm going to be using Standard Bank. But yeah, drop your questions, thoughts, comments in the comments, and stay with me for more on business, leadership, and geopolitics. And thank y'all for hanging out here with me in my tired state. But I do hope that this was helpful. I really want to get this information out, but more to come, y'all.